So I'll update you with my trading portfolio, starting off with what was my favourite trade, International Tower Hill Mines Limited, which I'd gone long on, I think down here, and I was really looking forward to seeing this curve reverse and go the other way, but I guess the truth is I was trying to pick the bottom and see if I could find a trade that was going to go nicely in the other direction, but it, of course it went against me, and this last week it went through its stop loss and the position was closed. So the lesson I've learned from this is don't get too attached to a trade. I think actually what happened with this trade was that I opened it and it did well, and then when it came back down again I closed it, but then opened it again thinking that the trade was going to do well, and it didn't, and I had a chance to get out. I got out. I could have saved my money, but because I was so in love with this curve, I thought everything was going to be good, and I went long again, and things went against me. So that was a lesson. Don't get too attached to a trade, Andrew. So there we go. But this share will remain on my watch list. I still like that curve, and if things go up again, then I'll certainly be interested, and I'll be particularly interested if the price doesn't go below the low of October last year. So if we get a turnaround and things move up, I think there'll be a strong case for going long here and using a point below the low here as a stop, and seeing if we can ride an upward trend. But that's something that I am thinking about doing. It's certainly not advice that I'm giving you. Now, the other trade that closed this week was my short trade on the Nikkei 225. I had gone short when the price dropped strongly down through the average for the year back here, and the trade has sort of meandered around. Now, when I opened the trade, I was using a certain type of stop, and actually as the weeks went by, my trading system had changed, but I didn't actually move my stop away, and what happened was that the stop got hit, and that was the end of my Nikkei trade. How do I feel about it? Well, looking at the price here, it's really right on the average for the year, and of course things could go either way. So sad that I've made a loss, but obviously if the Nikkei starts to do well again, I'll be very happy that I'm out of it. But yeah, I think I should have had a wider stop loss somewhere up here, and I think I would still be in the trade. And if things go down again, which they may do, then it would have been a good trade. So that was the end of my short Nikkei trade. Another trade that came to the end of its life was my short trade on household goods and home construction. You'll remember a few weeks ago I went short on this index. This is an index produced by the spread betting platform that I use, and what I saw was house builders' prices falling, but I wasn't able to open a new position going short house builders, so I used this index as a proxy for that. Now, the problem with doing that was that this was a mixed index of home construction and household goods, and the price hadn't come down through the average for the year, but I went short on it anyway, so I wasn't really trading the index according to the rules of my trading, and it started to go against me and I was losing money. So this last week I've closed that trade for a modest loss, but I'm ambivalent about it. I think that with the benefit of hindsight, what I should have done is just watch this index and see whether it goes further down in the way that I thought it was going to, and then once the right criteria had been fulfilled, then I could go short on it, and I'll still do that probably. But I've closed this trade, I've made a loss on it, so it's no longer part of my portfolio. So here's a position that I opened the other week. This was a short position in Lloyds Banking Group. The price has moved up, it's moved against me this past week, and if it keeps going up, my stop will be triggered, and I'll lose money there. But it may not. It may go the way that I anticipated it going. So we'll watch this space and see how it goes. Real D, this has gone up slightly this week, but hasn't moved a tremendous amount. But it's been going in the right direction. My short trade on ITV again has moved against me, but it's still below the average for the year, so I feel comfortable with that. And those of you that saw my blog post last week talking about candles will see that this candle has a long wick on the top of it, which generally suggests that there's downward pressure, and so particularly if this had been a black candle, I'd be even happier about it. I'd be anticipating this price falling away next week. So I'm keeping this trade open. I think this was a strong downward move, and you can see, I think that things still look good. In trading, you get ebb and you get flow. It's like the waves. So the wave comes out, the wave comes in, the wave goes out, the wave goes in, the wave goes out, the wave goes in. I'm expecting the wave to go out again. As far as I'm concerned, that's still in a downward trend, even though this last week and the week before the price moved against me. I'm still happy that the tide is going in the direction that I anticipated. But I've got a stop up here, and if it goes wrong, I'll lose money. But it's a fixed, amount of money, and that's all planned for. Evraz, this was a long trade, and this week has moved up a little bit and down, so hasn't moved a tremendous amount really, but it's still looking reasonably healthy. Aluminium has gone up this week, which is what I hope it will do. The price of aluminium has been falling for a long time, and when I went long Ali, again prematurely, it hadn't gone above the average for the year. It then fell down over the following few weeks, but now what you can see is that we've got a low here that was formed back in February. We've got another low back in March here, which is fractionally higher. We now have another low here, so I think this is reasonably suggestive of the price of aluminium going from a low and rising again. So I've got two higher lows here, so I'm happy that the price of aluminium is going in the right direction, so I'm going to keep that trade running. Now, the aerospace and defence sector I went short on a few weeks ago, and this has moved against me, but yeah, so it's just meandering around really, so I wouldn't say there's any direction here. It's just range bound, so my stop's up here somewhere, and obviously if the price goes up this way, I'll be out, but I'm hoping the price will go down the other way. SAB Miller, the brewer, as far as I'm concerned, this is a rising trend, even though this week the price fell. C'est la vie, industrial metals, likewise, there's a trend going this way. It went through the MA, it fell back this week, but it looks kind of pretty, so we'll stick with that. City Natural Resources High Yield Trust, this did okay this week. It went back up through the 50 MA, and that keeps me happy. Again, there's a low back in I think this is January, and there's a low here back in April, and as far as I'm concerned, the price is rising from that, and you can see it's come down a long way. I'm looking for a turnaround here, so I'm keeping a nice wide stop and hoping it will go in the right direction. Now, the Aussie dollar has risen this week, so that's good. I'm long the Aussie dollar against the US dollar, so that's a good thing. CenturyLink rose a little bit this week, didn't make millions, but went in the right direction. Sugar hasn't really done much, nothing. Yeah, it seems to have found a bit of a bottom here, and well, we'll just see what happens. It's really hovering very close to my stop loss, and if it drops anything much more, that'll be the end of the trade for me. Brazil has dropped down, and I am now in the dilemma of deciding whether I should cut my losses here or just wait for it to go. Yes, watch this space, we'll see how it goes. Coffee went down and up again, and again, candle lovers will see a nice long wick on the underneath of the candle here. This tends to suggest that the price will rise. You can see up here this long candle at the top of the rise, giving suggestions of downward pressure, which did indeed happen. So the converse is starting to happen. Last week there was a candle like so. This week a longer handle on the underneath of the candle, suggesting up pressure. I'm quietly hoping that this price is going to rise. Again, you can see coffee's come down from a long height back in 2011, and so I don't want to cut the trade short. I'm just going to hang in and hope that the price is going to go the right way. But I'm keeping my stop down here somewhere. Now, this was a horrible week for Anglo American. Miners were hit badly this week, and you can see the price just came right down. So this was bad news, but my stop's down here. So I'm still in the trade and hanging in there. Peabody Energy Corporation, it did very badly this last week, as it did the week before. But again, my stop's down here. I just hang in there and see what happens. Again, there was a low back in what was this, July of last year. Again, we had a higher lows coming up here, followed by another fall, but this low wasn't as low as the low back last summer. So I may be lucky and find that there's some resistance down here. I'm hoping that's the case. This candle of this last week was a shorter candle than the week before. So the week before, Peabody Energy dropped further than it did last week. So I'm hoping that there is some resistance here to the price falling much further, and that things will start to turn around. So my portfolio has been badly hit this week, and so I feel poorer than I did a couple of weeks ago, because things have moved against me, but I've got stop losses in place that will protect me if things go very bad. And what I'm going to do now is to not open as many positions, because I've been opening 2 positions every week and running 2R. That's risk. And so my plan now, because things have moved against me, is to do 1 trade per week. So risking 1R, one lot of risk. So that's a fixed amount of money that I'm prepared to risk. So I've been risking 2R per week over the previous few weeks, and because things have been going against me, my account's been going the wrong way. Although, of course, a loss isn't a loss until the trade is closed. So although the positions have been moving badly against me, I'm hopeful that they will reverse and go the other way. And as long as the trades are open, there's a chance that things will go in the right direction. So we'll see. It's calculated risk, and that's what trend trading is all about for me. It's taking a position and deciding how much to risk. And then the challenging thing is sticking with the trade, because if you have a number of trades that go against you, it's very tempting to cut them short. And then, of course, what you find a few weeks later is that if you'd hung in there, that actually things would have been fine. It's just getting used to the waves going in and going out, and making sure that we're not washed away by the tide going in the wrong direction. So that's the portfolio. Not a great week for Andy Rowe's trend following techniques, but hey, we'll see how it goes. Bye for now.